Today is September 4th, 2011. We're looking at a chart of the S&P 500. This is a monthly chart and looking 20 years back here. So you can kind of see that the August candle just kind of closed up and there was quite a drop. We came back into the 200-month moving average, kind of tagged it, and then we saw buying pressure off of that. But one thing to notice here is that, this candle right here and this candle right here, let me turn off the tracking on this. But this candle and this candle, you can see the lows were kind of the extremes at that point in time. After this month, we closed well below that, and we kind of, saw quite a spike in volatility. If we pull up the VIX really quick here, you can kind of see that reflect, very clearly. This was that, that drop in 09. This was kind of, I think this was a flash crash around then sometime, and you can see we had this thing push up all the way almost to 50, and we still are very high, relatively speaking. So, volatility in the markets has increased quite a bit, and that's a reflection of this last month's candle. But anyways, just looking at this, I think that by itself is enough to give me concern of the continuation of this uptrend. I think the sentiment has begun to shift here. So if we pull it down to a 5-year weekly, trying to get more clear picture with more information on this chart, you can kind of see prices kind of come into the 200-week moving average, kind of hanging on to here for now. But some of the technicals that I'll go over in a second lead me to believe otherwise. So if we get rid of these studies here and start drawing some things in, if we start off with horizontal support resistance, which we know is most important, we can drop in this level right here. We can see that there was resistance here, briefly resistance here for a few weeks, and then price broke through. And then on the way down, the market sort of ignored this level, but it's functioning as resistance once again. The other key level that really jumps out to me is this one right here. You can see that price, when we were breaking down in 08, we briefly had an up leg here. Came into this area and sold off again, and then again in 2010 we tested this level as support. So if price was to break down, I would think that this number, this round level here of 1,000, would function as some key support. Another thing that kind of gives me reason to be worried about this uptrend is this trend line right here. Now this trend is coming off our lows in 09, and you can see that we followed it quite cleanly until last month, where we just kind of broke through, and and it wasn't just a small breakthrough; it was quite violent. So, this level that we should have seen as support was violated very cleanly. Now we're kind of coming back and testing it again. Now, one thing I want to point out about the actual candles, the actual price action here, is you kind of had a hammer candle here, and price did break that high and continue higher, but again, we have an inverted hammer forming here. So this kind of tells me that, okay, well, this is probably going to be stronger because of the previous trend. You can see that we had sort of a head and shoulders here, so we'll take a measured move of that in a second. But what you sort of have is you have a left shoulder here, then you have the head, and then you have the right shoulder, all right? And usually when we break the neckline, and we can say this is a neck, roughly this is a neckline right here, just to have an approximation. The way we do this is we always go from the neckline to the head, which is the highest point of the pattern, and we extend that below. Okay, so the measured move target of this was right here in this 1140 area. You can see price went significantly below that, and we pushed back up. Now the only problem is that once again we're seeing sellers come back into this market. Okay, there's a couple other things we can look at to try and gauge the move or what's expected here is by using Fibonacci retracements. If we go from the all-time lows here on this chart to the all-time highs, we can kind of see that 50% lines up with that roughly 1,000 or 1,020 mark. Now, if we look at the measured move from the most recent high to the most recent low, it's pretty clear to see that price kind of just pushed up and tagged it and has sold off quite a bit since. So if you look at this information, we take it down to a 2-year daily chart, try and develop a game plan coming into next week. Well, pretty much what I'm looking at is if we drop in a trend line from this low point right here to this swing point right here, we really need to see the bulls pick up price around this level, so 1160 or so. If that doesn't hold, it's a pretty clear indication that we will see a retest of these lows. And again, if that doesn't hold, then there's not too much support until at least 1050. Between 1,000 and 1050, I think would be a reasonable target at that point. So this is kind of the last chance. Again, if for whatever reason the bulls do come in next week and we do see it close above this 50% mark of 1230, then I would say that the bulls are back in control. And at that point, I'd be looking for a price move back up to the retest of this neckline, which is roughly 1250 to 1260. So that's the game plan. Really, what happens early in the week here is going to develop the rest of the story for us, perhaps the rest of the month, if not longer, at least in my opinion. And again, that could change, with comments from the Fed, things like that. But specifically from a technical standpoint, this is what I'm watching. Now, if we go out to the Euro-US dollar, looking at a 2-year daily, you can kind of see that we have seen a significant flight to safety in this last week. The dollar has picked up steam quite a bit here. So pretty much looking at it, let's look at a 5-year weekly, try and develop a game plan from a higher perspective. What I'm seeing here is pretty much this leg up, and in my opinion, this seems to be some sort of a bull flag, right? And the reason for that is because we have not broken the halfway back yet. This was 50% retracement. We put a hammer candle right there, and we've kind of been bouncing around since. But if that's the case, I would like to see price hold this trend line through here, right? And this trend line is obviously have a weekly chart. It's going to be very critical. If we do pierce that, I think it's pretty much game over. So that level is roughly between 140 half and 141. Depends on what time frame look at it. Let's get a 2-year daily, and you can see that price is gapped down again here on the euro. I think the market's just opened up here. It is Sunday, and you can kind of see probably 140 to 140 half is the more likely level, which is also the bottom of this range. So I'm currently short on this. I'll be looking to take profit at this black line right here, which is the bottom of the range, and then looking for longs to develop from there. If that doesn't happen, then again, I'll be back short again and looking for a breakdown of the euro. So a couple things so far we looked at is the S&P and the euro. If we see the S&P bleed out, then chances are we'll see dollar strength, which will also benefit our short euro trade. And with that, we should be watching gold, which has been on quite a tear. So we pull up GLD here, and we pull up a 2-year daily is fine. Let's move a 5-year weekly. You can kind of see the extent of this move. It's been exponential. When prices started moving here, a lot of people thought that gold was oversold, and pretty much then getting squeezed, and prices have been moving up even more rapidly than before. So is it possible to see a pullback? Of course. Prices have been extended. I'm personally not trading this. I'm long silver, but in a very small way. If we do see this thing unwind, kind of like silver, when it unwound, it came down hard. With gold, I don't see that risk, as being as significant as well as silver, primarily because gold is kind of a flight to safety in itself. When the U.S. dollar is not as certain, and the other currencies around the world aren't certain, gold tends to be that other currency people can run to. So again, if the S&Ps fall off a cliff, if the euro falls off a cliff, then gold should be going higher in terms of macro sense. The other thing that is interesting is bonds, and you can see that they are at all-time highs. In fact, we even passed up the highs of our, terrible crash in '08 and '09, and we're passing it up. So this is, to me, it doesn't make much sense because as faith in the U.S. gets is essentially lowered, it becomes even cheaper for the government to borrow money, which doesn't really make sense from a macro perspective. The only real explanation that I see for this is that because prices for bonds are increasing, somebody with a lot of money is pretty much running safety, and for that reason, it makes me feel that we will see another recession. And so, with bond prices going higher, people are moving their money to safety. With gold prices going higher, people are moving money to safety. And obviously with the S&P, starting to break down and the euro starting to break down, that whole big picture comes into play. So this will be interesting to watch and see how everything kind of pieces together. But those are just my general thoughts. In terms of individual stocks, I'm looking at GDX. Nice breakout here of the highs. If we get a pullback back to the support level, I'll enter long and a stop below last week's low of that candle. So essentially looking at 52 at about 60, 65, or rather 64 as the range here before the breakout. So it's about 12 points to the upside, risking about 3 points on that move. So nice 3-to-1 risk to reward ratio there. I'm looking to get short BID. If this does pull back early next week, I'll take a short, put a stop of the high. Again, head and shoulders pattern. That measured move will come out to about 21, this support level right here. So that should be fun to watch if that plays out. I'm also in APKT, again short. Similar setup here. You can see that there's an inverted hammer. Price came into resistance, and then there's been some selling pressure. I'm looking for the roughly 35 area to take profit on that one. So just kind of watching all these things play out. I will adjust my position as needed during the week, and obviously take off risk if if things go against me. But that's how I'm positioned right now, and it should be a fun week. So good luck to all of you, and thanks for watching.